You're listening to Simply Put, a podcast from FHN Financial. I'm your host, Will Rinehart. The release of ChatGPT in November 2022 catapulted artificial intelligence, or AI, into the global spotlight. The promising potential of this high-productivity technology quickly became the focus of major tech companies, financial markets, and political leaders. But the path from AI's current capabilities to something as transformative as electricity or the steam engine will be very expensive and full of uncertainty. On today's episode, we talk with Will Rinehart, resident senior fellow at the American Enterprise Institute's Center for Technology, Science, and Energy, about the trajectory of AI development, its likelihood of becoming a generational disruptive technology, and how it could help narrow the federal deficit. Stay tuned. Coming up soon, the macroeconomic impacts of artificial intelligence with Will Rinehart. But first, a quick market update. This morning's January employment report showed payrolls grew 143,000 last month, and the unemployment rate changed from 4.1% to 4.0%. The last 2 months of job growth were revised upward. The bond market had sold off a few basis points as of this recording. President Trump threatened 25% tariffs on imports from both Mexico and Canada before all sides came to agreements that will postpone any tariffs for at least a month. The president followed through on a threat to implement a 10% tariff on all Chinese imports, though the Chinese government has decided to wait until next week before enacting any retaliatory tariffs. 3 weeks into Trump's second term, investors are cautiously interpreting the president's tariff threats as the first stage of a longer negotiating process rather than final policy changes. Last week, the Federal Reserve left the Fed funds rate unchanged, as was widely expected. The press conference and statement gave basically nothing in terms of future guidance. A March rate cut looks like a slim possibility now, but the Fed will still react based on how the data evolve. Also last week, fourth quarter GDP grew 2.3%, slightly below expectations of 2.6%, but only because businesses had to draw down inventories in the face of unexpectedly strong consumption. Core PCE inflation within the quarter confirmed that price pressures were on a slight downtrend to close out 2024, even if they are not yet at the Fed's 2% inflation target. Treasury yields fell at the beginning of last week after the release of Chinese AI startup DeepSeek's chatbot caused big equity declines and a flight to quality in the bond market. The 10-year yield stayed above 4.5% until geopolitical anxieties and a downside miss to the ISM services brought yields on 10s down to 4.40%. Today's episode is all about how models like DeepSeek's chatbot fit into the longer-term macroeconomic landscape. Treasury announced it will not change the sizes for most of its coupon security auctions over the next 3 months. While this was widely expected, investors were surprised that the press release kept in guidance, saying the Treasury did not expect to change its auction sizes for at least the next few quarters. Issuance of more longer-term Treasury debt feels inevitable down the line, but for now, Treasury will continue to fund the widening deficit with more T-bills. That's all for the market update this time. Now, our discussion with Will Rinehart. There's been a lot of hype about artificial intelligence, or AI, over the last few years. Big tech firms have shifted their focus to developing AI. Stock market gains have been concentrated in companies that are heavily into AI. And there's a general sense that it will be this generational technology that changes how we work and live. More recently, a Chinese AI firm called DeepSeek disrupted the whole industry when it released a chatbot that required less energy and fewer microchips than its competitors. Of course, the eventual development of AI has huge implications for the macroeconomy and the longer-term path of the bond market. So I talked to Will Rinehart, a resident senior fellow at the American Enterprise Institute's Center for Technology, Science, and Energy, to get a better understanding of the economic impacts of AI. My first question was, well, what are we talking about when we say AI these days?
Artificial intelligence means so many different things that we can use it and reference it for many, many different kinds of problems or different kinds of actions. And so I like to think about it, at least in one way, think about it as a binary between this kind of predictive problem or predictive problems generally, and then generative problems. So predictive problems are the things that kind of matter or are making or having potentially big impacts. This is like drug development, financial markets, right? These are models that try to predict or try to figure out, for example, credit worthiness or the likelihood that a drug's going to work, or a likelihood that, say, a material might work. So we're seeing kind of interesting things happening in this side of the predictive side. But there's also this generative side, which is what has been driving a lot of conversation, right? So this is LLMs, image generation, video generation, all that kind of good stuff is on the generative side. And I will say, given this, there's also an important distinction to be made between like AI and robotics. Those two things are very, very different, and you need to be very specific. With this conversation, we're just focusing on AI. So keep out robotics generally from this conversation.
ChatGPT 3.5 came out just over 2 years ago, and to me, this is what really caused this boom in attention on AI. For anyone who hasn't used it, it's pretty impressive. It can make complicated pictures based on prompts you give it, create songs that sound incredibly realistic, and write stories or academic essays, all in a matter of seconds. But as cool as these specific things are, they're not changing my day-to-day routine. Is AI still just entertaining rather than that generational technology everyone expects it will be?
GPT 3.5, when it first came out, it was, I think, transformative, right? It was fundamentally, it showed that this sort of generative AI is and can be very, very, very useful. That's really the first generation of these models. And the second generation, or at least these more advanced model generations that we're talking about now, right? Within 2 months, it had 100 million users. It was the fastest growth in any product that we've ever seen for 20 years, right? For 20 some years, this is the fastest product that we've ever seen. And that is, I think, what when people still work through it and still use it, they're still using it in that sort of way, right? It's language, it's creation of content and creation of things and structures that, like presentations, all that kind of stuff, right? But really what we've seen the last year or so is a whole bunch of advanced models that are adding in reasoning on top of that, or at least adding in advanced time for reasoning. Again, going back to this kind of framework, right? If we broadly bucket these things of predictive, drug development, financial markets, all the things that are happening, fundamentally, these have been happening for quite some time. There's been a whole class of drugs that have come out that have been, or just now, rather, I should say, coming out because of predictive drug development. I think that we see a very real application separate from the LLMs in other industries, financial markets in particular. This is huge, important right now in insurance markets, all those sorts of things. So this predictive side has been chugging along, but the generative side is, I think, much newer.
Just to clarify, LLM stands for large language model. It's a type of machine learning that's behind the generative side of AI. Will says that technology is still in its earliest stages, but it's also where the biggest promises are for AI technology. OpenAI, the creator of ChatGPT, has a roadmap for how they want to develop this technology.
OpenAI has done this, right? Where they've gamed out where they see things going, and eventually where they see things going, right? You start with these really simple generative LLMs, and then you work from there into reasoning models, and then you take from reasoning models into what are called agent models, right? So you take all those little reasoning bits about math and science and all these other things, and then you put them together into an agent. That agent is then able to do more complex tasks, kind of potentially fundamentally like institutional tasks, right? Doing prediction, understanding what's going to happen in markets, alerting to people when things are happening in markets, combining content generation with kind of reasoning in order to produce or predict certain things in a whole bunch of different ways, right? And you can see this, you can see some of these things being pulled together, at least some of these parts being suggested by OpenAI. The last part of this is actually creating firms. This is level 4. It's creating firms that themselves can potentially be market disruptors, right? So you actually create firms that can do things financially, that can work together, that are organization and entrepreneurially driven by these sorts of agents in settings.
Putting that into perspective, generative AI is really only in the infancy of what some people think its eventual capabilities will be. The next level, actual agents that mimic what a completely learned individual can do, is the precursor to full-on firms that would replicate what entire organizations are able to do. As you would expect, OpenAI's CEO Sam Altman needs a lot of money to fulfill these ambitions, and these capabilities could still be far off if they materialize at all.
I think it's important to at least be very conscious of what's happening in the market and where these firms are moving, where they're saying they're moving, because that's where Altman is putting in billions of dollars, right? He's going to need for his next generation of data centers to get to agents, just to get to agents. This kind of third step in the model, just to get to agents, he's going to require something like 50 to 100 billion dollars of investment, and he's said it as much, right? He's been very, very explicit. That's a lot of money to raise, $100 billion to raise for the next generation of data centers. And you're not basically even at the market disruptive phase. Not saying that's not coming. It is coming. And my near-term expectation is that we're going to see some, and Sam Altman actually did a kind of an ending year blog post on this, where he basically said that we expect financially, institutionally helpful agents to be active by the end of next year. And I think that's actually what's going to be interesting. It's really going to be interesting to see these sorts of agents actually work within companies, potentially help in a very, very specific way. And I think that's really where we should be watching for inflection points. I'm skeptical that Altman can do it, to be fundamentally honest. I think this is a lot more difficult than people want to admit.
One reason to think all these promises are not guaranteed to happen: the cost. These generative AI prompts require tons of energy and processing power to create content. As much as investors are supporting a lot of these upfront costs, users are still being saddled with high prices.
The O1 models that just came out, that just went public, right? Those are what, $300 per month per user. I mean, they're incredibly expensive licenses. I'm pretty sure it's higher. I mean, I know it's in the 1800s for a singular use, but I think some of the the group ones can get down, and it's still super, super, super expensive, right? It's hundreds of dollars to run these models continuously. And what that means is this is a huge capital outlay for firms. These sorts of reasoning models, as we're seeing right now, are incredibly expensive to run, just even on a basis right now. It's a huge capital outlay. That's important also to understand, because these sorts of capital outlays and how current companies adapt to these sorts of reasoning models, I think is going to be very, very interesting. But it also, I think, the important point here, the real takeaway is that it seems like it's getting more expensive to produce the benefits that Sam Altman wants to go in order to go down the pipeline. His pathway seems to be a more generally capital intensive one. And I think that is probably the big economic story that's happening with all of this.
We recorded this interview just before DeepSeek's chatbot went to the top of the charts for iPhone downloads. Now, it's still too early to tell if DeepSeek will fully replace the progress that American firms have made. But the reason its apparent capabilities are such a big deal is because it appeared to do a lot of the things ChatGPT and other bots could do, but using much less energy and using much fewer microchips. Still, what is it about these generative AI prompts that are different and more costly than what most of us are doing when we browse the internet?
The basic problem here is that there's different unit economics of AI as compared to software. In the world of software, you have relatively high fixed costs, but your marginal costs are pretty low, right? That creating an operating system or creating Google, for the most part, is, as long you do that initial investment, obviously you have to continue with that investment, but fundamentally there's a relatively low marginal cost towards the usage of the product long term. That's not what we have in AI. It's much closer to like a traditional system, right? It's actually pretty costly to serve on each one of those additional units.
In other words, making an image for your next party invitation using generative AI is a lot more costly than doing one Google search. Of course, the initial costs to make a search engine algorithm are big, but each search afterwards is cheap. This is important for individuals or businesses who think about integrating generative AI into their routines.
I think it's something worth thinking about, right? It's like if you're trying to create additional units of intelligence to make business decisions better, that there is going to be a cost to that. The demand for these models and the demands for usage of these models, what that means for an individual company, I think is it's very, very difficult, right? There are a lot of limitations on companies actually using this. Highly regulated firms are not touching any of these models, right? It's illegal in many cases actually to use, in a whole bunch of medical instances, and a whole bunch of financial decisions, and states themselves are regulating. So there's always a person in the loop on a lot of this stuff. So there's regulation fundamentally that limits the ability to switch over. I would say very specifically, right, each firm has this, potential to adopt to a new technology, right? And when we think about that, the benefits have to be greater than the costs. And in a lot of cases, you have an incredibly high cost, but it's unclear where the benefit is for a firm. So in some cases, I think we do have some very clear examples of things being potentially beneficial, right? It seems call centers are actually helped pretty substantially from these sorts of systems. Data manipulation tasks seem to be pretty boosted by some of these things. But still, fundamentally, you're still talking about percentages that basically, like your productivity percentages are 10-15%, which are substantial, can be substantial in some cases. But kind of going back to the robotics thing, some of these robotics firms and robotics production increases are in the realm of like 20% or 50%, right? A new sort of system can drive your costs down substantially. So the gains that you see, I think, are going to be important to watch. And even when we see those gains, they're not the kinds of things that traditionally have, there have been gains, obviously, but those gains are big, but they're not that big, right? They should be bigger than all of this manufacturing robotics combined, and yet they're about half of all that. I think that's a very, very telling thing to see. Maybe this happens and changes over the future, but I just want to also dispel, because especially within the AI community, there's this optimism, which I think is important to drive changes, but there's this also kind of naivete about how business is regulated and how businesses work. And in those instances, it's much, much more costly. You do have increases in some cases, but there's no guarantee that you're going to see dramatic productivity gains.
Outside the practical limitations, there's also the simple reality that new technologies take time to be adopted, take time to really flow into the broader economy. Especially, Will says, for general purpose technologies, the kinds of things that fundamentally change the way almost everything works.
This GPT has, in the economic sense, or, what you kind of think of, like, steam engine and electricity and all of those sorts of things, tractors. And what's fascinating is right now we can look at these old general purpose technologies, these kind of like big, bold changes into the economy. And we see that it effectively takes basically 15 to 20 years for any sort of change to occur within an industry. So, prime example, the rise of the electric factory for a very, very, very long time in America, basically until 1914 to 1917, we were still largely using water power for most of the factory whirling dynamos. These are basically the things that changed around and ran machinery. You can kind of go and see some of these old factories in Detroit. There's a couple of them in like Edison, New York. Really, really cool. It wasn't until, again, basically the 1920s that you actually saw the complete domination of electric factories. And this took, those technologies were in the United States were originally introduced, right around the Civil War, about 1860. So electricity is first being used right around that time. It took 60 years for this technology to completely transform all factory production. We see this constantly, time and again, that these kind of general purpose technologies take 20 years for them to affect the initial industry, and then another 20 years for them to basically diversify out into other industries. The tractor is another great example, right? It first got used in the 1920s in the wheat belt, primarily North Dakota, South Dakota, and Kansas. But it actually took a second wave of technology to occur from 1930 to 1940 to actually adapt to corn, because corn is just a different, it's a different way of harvesting as compared to wheat. And so that technological adaptation that took place over 30 years, 20 to 30 years. So you see this oftentimes with these sorts of technologies. What you see is this kind of first wave, right? It has very localized effects in a very specific set of industries, and then it disperses into the wider use and wider dissemination. But that takes a generation. Even in the most disruptive cases, we're talking about a generation to fully transfer over to the new technologies. And that, so I'll say this, and that's in the best of cases, right? So in the best of cases, in truly transformative technologies, right? And I just want to be very, very clear about it, that when we look at electricity, when we look at when you look at tractors, these things are truly transformative. Production goes up dramatically. You know, we're talking serious increases of percentages from the tractor, right? You're talking about 40 or 50% in the first couple of years alone. It's a dramatic increase. Again, we don't see that as much with LLMs. And what we're assuming with LLMs and with AI, given the fact that it's not even disruptive in these early stages in a very dramatic way, maybe it is a slow roll, but my expectations is probably going to be a slow roll.
But what about disruptions to the labor market? Even a seemingly complicated job like a surgeon can be done by machines these days, not to mention the more mundane tasks of things like data collection. Historically, people have tended to push back against new technologies because they were worried about losing their jobs. The old story of John Henry, for example, about the man who tried to defeat the steam engine, shows how embedded this man versus machine narrative is in history.
My assumption generally with labor is we typically do what's called an overlapping generations model, right? That we understand that these things, that people become educated, they enter the workforce and they exit the workforce over a given time period. We call it an overlapping generations model. And I think that's probably the way to think about this, is that you constantly have overlapping generations that are working in a group of different industries that are all kind of working together. And as long as you can allow for the next generation to have the skills to adopt to the technologies and the labor pools and the requirements of the labor economics at that point, I don't think that there's necessarily a big problem. We see this as a problem because there is disruption, and I don't want to dismiss the problem in the fact of, you know, workers getting disrupted in the 1970s, right? The auto workers all going out of business. I mean, we're talking about big, huge long-term trends here, right? We're talking a 20-year cycle or a 40-year cycle. I mean, if we're talking about a 40-year cycle, that's somebody's entire career. And if you think about them having basically high quality, educated individual working within those 20 or 30-year career, you know, just generally speaking, right? We can extend it out in various ways. But what it means is that, unfortunately, we need to make it easier for some who are disrupted probably to deal with those generational shifts. But fundamentally, I think what we're seeing is every new generation is adopting to the technologies and acquiring the tasks of that era, of that time.
Taking a big step back, past the ways we might change how we work and live, if AI really does deliver on all the hype, it could have tremendous influence on the big macroeconomic indicators we care about on this podcast. Things like interest rates.
If artificial, AGI, artificial general intelligence, is in the near future, right? You should have demand for capital expenditures. CapEx should go up, or there should be, there should be increase in demand for capital expenditures. And fundamentally, if capital productivity rises significantly due to AI, then real interest rates should also rise as well. Generally, this is what we predict, right? A big boost of AI productivity should boost the return on capital, which then raises real interest rates.
For all the excitement we see in the financial press and in the stock market, there are also signs that the bond market isn't pricing in the same amount of optimism.
You know what's interesting is when you actually look at long-term interest rates, given these like super disruptive models, the growth and changes that are dramatic, they are not aligned, right? The long-term real interest rate should be higher if we expect to see, and we will see in the next 30 years, dramatic shifts and changes. And it really, there's only two things that are going on here. One, this kind of super disruptive AGI notion is being basically like not understood by the market, right? So the market is not efficient, which I don't think that's probably the case, at least in the long term, right? Short term, maybe it's inefficient, but long term, it's a long term market. It tends towards efficiency. It probably isn't the market, incorrectly evaluating the information. The likelihood is that the actual reality is in the near future, we're not getting AGI because there's not this sort of demand and productivity boost that we're expecting, which I think is really, really interesting, right? That what we're seeing in these interest rates and, expectations of inflation is they should be going up and they're not.
Let's go back to assuming AI really does deliver and real interest rates are underappreciating the future productivity gains. In this instance, AI is more likely going to deliver downward pressure on inflation, at least in the long run. Fewer resources to produce more stuff means lower pressure on prices. But outside the inflation and interest rate impacts, all of this attention on AI has created anxiety, not just for people who feel their jobs could be threatened. There's some real risk to security, privacy, intellectual property, lots of things that our elected representatives want to safeguard against. Of course, it can be difficult to strike that ideal balance between safeguarding against potential harms and allowing a new technology to prosper.
I take a very different take than I think most people do, which is that my worry is that government acting on AI is going to be the biggest break. Unlike social media, which there was a lull period in the regulatory space, we've seen almost immediately on the AI policy space, which is where I do the majority of my work. We see that dramatically shifting in a way, in a quick way towards the regulatory realm in a way that I've just never seen it before. Right? To be very, very, very specific, it took almost 10 years, 15 years for social media to go through a cycle of everyone loved it to regulation. And we're not seeing that with AI. It was introduced in effectively LLMs were introduced in 2022. And already we're seeing a clap. My worry is the government enacting in this space is actually going to have a huge detriment because it's going to do bad things. Most of the bills I've been seeing are pretty poorly written and not very well thought out for various reasons. I think people need to know, and they may not have this sense of the market.
One natural response to mitigating some of the negative impacts from AI is to write new laws, but there are other levers of government power that are sure to come into play.
I think everyone looks to Congress in order to act on AI, and that to me is very interesting because there's so much else that's going on in the other branches of government, right? There's going to be a whole bunch of other things that are going on, specifically in the judiciary and the executive. And in both of those cases, in the judiciary and the executive, there's been a lot of actions. There's been a lot of, Biden had his EO. He had this massive change in, agency by agency. There's some 150 mandates in the artificial intelligence executive order. So there's been a whole bunch of actions that have happened in the executive side through agencies. The FTC has said they're going to go after individuals in the consumer protection realm, all of that kind of stuff. And then also in the judiciary side, we've had all these copyright cases. We've had all of these things happening through tort law and property right claims. And, now we have some of the first consumer protection claims that are going out. All this is to say that, yeah, Congress may not do something, but that's probably a good thing fundamentally because there's all this other action that's happening anyway. Machinery of government doesn't just stop because Congress is not doing something. And I think that is another misconception of the way an AI should work. Even with AI regulation, the big thing that I'm finding is people are even struggling to define what the thing is that they want to regulate. When ChatGPT was regulated, it was regulated by a very specific understanding of the time that it was used to compute the model itself. That who knows if that stays, but fundamentally what I'm seeing within the regulatory space is a grasping for regulation. They're going to end up regulating both predictive and generative content, and you probably want to do those differently, right? The predictive content, which is super important in financial markets and housing and all that kind of stuff, needs to be regulated by those act, right? By the Fair Housing Act, by the Fair Credit Reporting Act. All those things are already regulated. What you need to do, which is what the agency have done, is just say, hey, we're going to apply these notions that we have in all these other contexts and just apply them to AI cases. And that's the best that we can do right now, because eventually we're going to have to bring court cases in detrimental instances. And in those detrimental instances, right, those court cases are going to have to happen over a time period of, say, 10 years for these lessons to get embedded into kind of, I don't want to say an efficient way, but in a way that would be helpful. But we're not seeing that, right? We're not seeing this kind of bottom up sort of trust the process. Instead, you're seeing Congress and other state legislators trying to act.
A lot of people have also pointed to these new powers of AI to help cut federal spending. In theory, powerful machines could identify areas of waste, fraud, and abuse and make narrowing the federal budget much easier.
Yeah, I mean, there is a lot that can be done. We know there's a lot of opportunity on waste, fraud, and abuse. There's Medicare payments and Medicaid payments. There's big potential savings there in the billions of dollars. Those are super, super fascinating methods to deal with this. Again, that's a little bit more on the predictive side, right? You kind of predict where the problems are going to be and where people should have better, where there shouldn't be process payment issues, for example, in Medicare and Medicaid. So it's interesting, right? These early versions of artificial intelligence, even those are not being applied massively in a government context. And to me, what I think is interesting is using some of these LLMs could be super, super helpful. I've written about this idea. I called it Chat GBT, as to be clever-ish, I guess. But the other part is actually using these LLM and generative content. Again, back on the predictive side, we can use these models to figure out old and outdated regulations. HHS did this a couple of years ago under the Trump administration. A great project. You basically go through and you figure out all the stuff that no longer applies. Great. You do a massive docket and you get rid of everything all at once, and you basically clear the books. I think that's another way we can use LLMs to clean up government. But the biggest thing that I think that we're going to have to deal with, again, will be Medicare and Medicaid payments. That's the kind of the efficiency. The headcount problem, I think, is actually difficult because it's pretty clear that we actually don't have as many auditors and people working for the government to actually go after individuals and fraudulent material. So probably need to spend more money on that. I think that could be an interesting way in which, again, the LLMs help to flag and pull together some of that information. That could be a very interesting use of it in the near term, right? As doing this kind of, again, you use the LLMs to figure out the waste, fraud, and abuse problem. But the getting rid of headcounts, that to me is just, I feel like that's going to be a very difficult task because America already is near the bottom of the amount of government workers for the entire workforce. It's towards the bottom of that, and at least for developed countries. So getting that even lower, I think, is going to be difficult. Where I do think LLMs can be powerful is constituent services, information, claims, waste, fraud, and abuse. But again, that world again looks marginally better, right? And I think that's important. That we should definitely be trying to implement those things. But I don't think it's fundamentally transforming government in that way. However, the big thing that I think could be interesting, the big problem I see in the near future, there's really two big areas where I think near term we haven't really figured out how we deal with it. If AI systems bring a whole bunch of new lawsuits, right? If they basically spark new sorts of lawsuits and new sorts of content problems of various sorts, I don't know if we have quick systems of dealing with this, right? The judicial system is backlogged in many ways for some of these, tort cases. Trying to solve that, I mean, that could be a near-term problem. But again, I don't think that's as likely. The big problem, I think, that is probably no one really is talking about is basically fraud in like contract cases currently, right? You use it to rewrite a contract that you maybe didn't have, right? So you're in a court case and basically a person goes through and creates a contract that looks like the contract it should be, and they've just done that for nefarious reasons. I've heard people talking through this because some of the judges that I've talked to in the courts dealing with, for example, divorce, have been noticing that even their content, even their evidence is being edited by screenshots and screen grabs. It's been very, very, very interesting. There's already been a couple cases that I've heard about that are going through this. So this kind of evidentiary side of things in the legal system, I think, is actually going to be a interesting near-term problem that most people aren't thinking about. And then there's other things that I think you can use this for to help out. But I don't know. To me, there's a lot of opportunity here, right? That AI provides, I think, a lot of opportunity. It's going to be transformative, but I don't think it's going to be at the level at which people think it is currently. So I'm optimistic, but probably a little bit more bearish than most on this.
And when it comes to the mechanics of financial markets, AI could make a huge difference at some point. Finding new ways of price discovery and information discovery will change how markets operate.
Yes, financial agents, as they're called. If you're interested in this, these financial agents, that's what you should be looking for. These are a hot topic right now. They're being actively developed. So yeah, they work through platforms. Recently, the system itself. So it's important to know that there are a lot of times limitations on these kind of automatic agent transactions. Stripe has said recently they're going to allow for it, so they open it up to automatic transactions. So I'd be looking really towards those sorts of things. Right? Near term, I think that we're going to see a lot more I mean, yes, you're right about price discovery, but it's really just information discovery, right? And having extra minds dealing with this problem of financial markets. It's going to be integrating into platforms. I see this as a very, very near-term thing that's going to be happening. Broadly speaking, we see a lot of integration of AI into quoting, which I think is interesting. Right, insurance quotes have had, there's a lot of interest in working in that as well. Property taxes, there's also an interest in trying to do this for property tax assessment, which I think is a really super fascinating application of this near term. You use AI in order to think through your property tax assessment. I was actually doing a project and I was helping them on it. So they have a kind of a pilot project, and what they're thinking about trying to do is go through and fund it more fully, a project to basically create property tax assessments, because we know that generally speaking, people who are lower in income pay too much in property taxes, right? It's too the entire system is bad for the bottom end and benefits the top end, right? It's not as progressive as it should be, I think would be the technical term. But in those instances, what we've seen, or at least some of these things that are happening, Chicago has it currently, you can easily access this model in this property tax model for the information, and you basically are able to adjust your property tax assessments.
Hearing Will talk about the current environment for artificial intelligence, it's interesting to think about how far AI still has to go before it becomes as disruptive of a technology as a lot of people hope it will. Chatbots like ChatGPT mimic certain human abilities in incredibly impressive ways, but the investment and technological progress needed to make AI as transformative as electricity or the tractor are not things to be taken for granted. If AI does end up delivering on the most optimistic predictions for productivity, the returns to capital will push up real interest rates in the long term, but there can always be short-run market inefficiencies. In the meantime, the government will approach AI regulation using the courts and the executive branch, not just using legislation. Next week, the CPI, PPI, and retail sales for January will give an early sense of how the economy started this year in terms of inflation and consumer spending. After the December CPI showed core inflation coming in slightly cooler than expected, investors are optimistic the acceleration in prices late last year was anomalous. Also next week, China could follow through on proposed retaliatory tariffs on February 10th if China and the US cannot come to an agreement. China sends the third most imports of any country to the US, but our trade deficit with them is the largest. Chair Powell will testify to the House Financial Services Committee next Wednesday. At times of inflection points in monetary policy, this type of appearance can be used by the Fed chair to communicate a pivot or respond to any public criticisms of the Fed. Because the economy is in better balance and the Fed is on hold for now, we don't expect this testimony to reveal very much. The following week, the minutes from the Fed's January meeting could shed light on the discussions that unfolded before the very predictable statement and press conference. There should be no bombshells in terms of how the Fed is looking at the economy or short-term rate policy. What could make an appearance is whether Fed officials have started thinking more about when to stop quantitative tightening. That's all for today's episode. Thanks again for listening. I'm Will Compernell, macro strategist with FHN Financial. This episode was edited by Bill Stanfield. Don't forget to like and subscribe to Simply Put wherever you get your podcasts. Email simplyput@fhnfinancial.com with any questions or comments. This podcast is presented for informational purposes only and is not intended as an offer or solicitation with respect to the purchase or sale of any security. Views expressed herein accurately reflect the speaker's personal views about the data, news, trends, events, etc. discussed herein or any subject securities or issuers. No part of their compensation was, is, or will be, directly or indirectly, related to any specific recommendations or views expressed. FHN Financial, through First Horizon Bank or its affiliates, offers investment products and services. Investment products are not FDIC insured, have no bank guarantee, and may lose value.